All right. Hey, everybody. Thanks for tuning in to another episode of BlockFi Live. I'm back in the office. Peter was complimenting me on my virtual background. It's actually not a virtual background. This is our real in-office studio. But we've got a great guest today, Peter Johnson. I've known for quite a while, Jump Capital, maybe not the most well-known name in crypto for folks that are just investing personally, but they are huge. And we're really excited to have you on the show, Peter. Thanks so much for coming on and chatting with us.
Thanks for having me on, Zach. I'm jealous of your nice office setup there.
So let's start personally. Just tell us a bit about yourself, where you're from, what your professional background is, and how you got to Jump Capital and in the role you're at Jump Capital.
Yeah, so I'm originally from Minnesota, and I am a partner and I lead fintech and crypto investing for Jump Capital. I've been doing that for the last 8 years. And how I got here is that I started my career as a management consultant, working with banks, insurance companies, and asset managers on strategy, operations, and new product development and technology work. Working with companies like JP Morgan and Bank of America and Prudential. And then went over to Morgan Stanley, was an investment banker there in their financial institutions group, doing M&A and capital raises for companies like E-Trade and Santander. And then 8 years ago, I met the founding partners at Jump Capital just as they were starting the firm, and was this really unique opportunity to join a brand new venture firm that was starting and just building from the ground up. Which was a really exciting opportunity, and coupled that with the fact that it was affiliated with Jump Trading. And Jump Trading, we'll probably get more into, kind of who Jump is, but it's just this massively successful quantitative trading firm, one of the leading, quantitative trading firms in the world. So I had this really kind of unique opportunity to build a venture firm, focus on the areas that I was passionate about, which was fintech and financial services. And do it well connected with this just amazing technology-driven trading firm. So I have been doing that for the last 8 years. We've built Jump into what it is today. We're currently on the Jump Capital side, investing out of our sixth fund. It's a $200 million fund. And as I mentioned, I lead our fintech and crypto investments. I've invested in a ton of great companies, BlockFi, obviously being the one that I am most proud of, but also invested in great companies like TradingView and BitGo and Bitso, Personal Capital, M1 Finance, 0x, kind of a whole list of great companies in the fintech and crypto spaces.
So when you decided to take the opportunity at Jump Capital, were you all anticipating that it would be structured as it is today in terms of the split between fintech and crypto, or the mix of those two things? Or did crypto kind of come about after you decided to join the team as an area of focus?
Yeah, so crypto came about a little bit afterwards, not long afterwards, but a little bit afterwards. So I joined Jump in 2013 and had heard of Bitcoin at the time, but really wasn't paying that much attention to it at the time. When I really started paying attention was, I can't remember if it was 2013 or 2014, but it was, I distinctly remember it was when the things happened in Cyprus, where the Cyprus government was haircutting the deposits of people's bank accounts in Cyprus. And the price of Bitcoin spiked on that. I'm pretty sure that this was 2013. And that got me thinking, like, is this real? Like, are people in this country really like fleeing their country's currency to put their savings in this magical internet money that could potentially be like, something that's, a safe haven or a different place to store your wealth? And that's what got me like really thinking about it and going down the rabbit hole and, reading the white paper and, reading, a lot of, things. There wasn't that much out there at the time, but reading everything I could get my hands on to find out kind of what is this, is Bitcoin, and what does it mean? And then after, spending a lot of time on it, like coming to the realization that like, yeah, like this is truly unique. This is truly revolutionary. For the first time ever, this creates digital scarcity. It lets people move money, move value around the world without the need for a trusted third party. And this is something that's going to change technology. It's going to change finance. It's going to kind of be the big technology revolution of my lifetime. and is something that I really need to focus on and spend a lot of time on. So while I came into Jump solely focused on fintech, it wasn't too much later that I started to really turn my attention to crypto as well.
Got it. And credit to you. I mean, I remember raising the seed round for BlockFi in 2017. There weren't a lot of fintech investors that were doing anything in crypto. So you may have been one of the first handful of investors with a fintech remit that was also looking at crypto. And how would you say that ramped up? So you see the Cyprus news, you're like, okay, Bitcoin is going to be a real thing. You educated yourself on it and started to develop a view. Were there a lot of companies around back then that you could invest in that were raising venture capital, or how did it kind of start to play into the allocation decisions that y'all are making for the venture portfolio?
Yeah, not nearly as many, and I do deeply regret passing on your seed round. One of my life's great regrets. But back when we started looking, yeah, there wasn't that many companies in this space. Kind of our path was, I got interested in it, started researching. We brought on actually an intern who used to be the general counsel at Coinapult, which was Eric Voorhees, one of his first companies, to help us like really get into the space and go deep. And I remember working with him. I believe he bought into the ETH pre-sale, and I did not. Oh my God, it seems like too much of a hassle. I don't need to do that. Another of my regrets. But we spent a lot of time getting really smart, I think, on this space. And then we started, making investments, and it was, I would say very selective at the beginning, just because, as you mentioned, there wasn't a ton of companies in this space. And then it ramped up over time. And, now we are, the pace that we're investing is, orders of magnitude faster than it was years ago, just because there's so many companies and innovation happening. It's similar to what's happened on the trading side of Jump. They got in, it started as an R&D effort to just, learn about the space, and frankly, to give, some of our interns and talent a place to, kind of learn and play around in this new space. And then it's kind of ramped up to be just a very big part of the firm on the trading side as well.
Yeah, so that's a great segue. So we understand Jump Capital, venture arm, fintech focus, but also crypto on your sixth fund. Tell us a little bit about Jump's market making and trading operation, because I think it's probably one of the biggest forces in crypto that isn't necessarily like a household name, because y'all don't really operate a consumer facing brand, but you're everywhere. So give us a little bit of the context there in terms of Jump's traditional business, I guess, and then how that interplays into the crypto ecosystem.
Yeah, so Jump is unquestionably one of the biggest names, I think, that most people haven't heard of, both in crypto and then in the traditional markets. And that is because it is a purely proprietary trading firm. So there is no outside capital. It's just trading the capital of the owners of Jump. So there's really historically been no reason to be public. Just stay under the radar and kind of do what you do. So what the firm does, they've kind of built what they built by being on the leading edge of technology over the years. So started by floor traders 20 years ago, kind of saw electronic trading coming, got ahead of that, saw low latency trading coming, got ahead of that, and then became this kind of deeply quantitative research driven trading firm that it is today. And that's really what Jump is known for today, is being this kind of very, very highly quantitative trading firm. Trades, it's one of, I believe, the largest futures trader in the world, largest trader in the world in many different asset classes, one of the most important market makers in the world in many different asset classes. And then that has carried over into crypto. So Jump is unquestionably one of the largest market makers in crypto, trades on every major exchange, trades a very high percentage of the volume on those exchanges. And that is, I would say, the core of what we do on the trading side. Jump Trading also works directly with crypto projects in a variety of ways, as a customer to some, as a large liquidity provider, in the DeFi space, starting to get into actually participate in governance and running nodes, doing creation and redemption of stablecoins and those types of things. So very deeply ingrained in crypto in a whole bunch of ways. But I would say a deeply important player in the ecosystem and a very large player in the ecosystem.
Yeah, and I don't want you to divulge any secrets here, but I'd be curious, if there's any context you can share on the market making side in terms of just how the team internally thinks about crypto versus traditional markets. Like, is it like the crypto market making operations for jump trading are maybe smaller on a notional capital basis versus some of the other traditional markets that y'all are active in, but it's wildly more profitable because of the volatility? Or, is there a view that some of the trading technology still has, a lot of room for improvement versus traditional markets? Or what, if any, themes can you share with us that you hear from the market making jump trading side of the organization in terms of like the difference between making markets in crypto versus making markets in the other asset classes that y'all are active in?
Yes, the biggest difference is that the market structure is very different in crypto. That the exchanges are just very different from a technology perspective, certainly from a capital perspective. Exchanges pretty much all require pre-funding, which is kind of very different than the traditional markets. There's not really prime brokerage in crypto. The kind of settlement on the back end is very different. So you have these kind of unique and weird situations where you have, exchanges in Korea that will at times trade at much higher prices. And the reason they do that is because if you capture that ARB, then you're stuck with Korean won, and there's really no way to get it out of that country. And so you get just these weird market dynamics that you don't have in the traditional markets because of the market structure is different. So it's a lot of, I would say, like the kind of market infrastructure and post-trade side of it is very different and unique. And that is an area that jump trading kind of specializes in, being very good at working through all those kinks. On the actual trading strategy side, it used to be that trading strategies for crypto were very simple. You buy at one exchange kind of low, you sell at another one high, you capture that spread. That doesn't really exist anymore. And it's, from a trading perspective, starting to look much more like the traditional markets, where you take these traditional market making strategies that you're doing in equities or FX or these other markets, and you overlay those into crypto. And like, that's what the market is starting to look like now. So I think that has changed over time, is that now the market makers in crypto and the strategies that they're running, it's very, very similar to what you're seeing in other markets, which is very, very good from a market just maturity perspective.
So you've been a tremendous thought leader on, crypto markets and where things are heading. You wrote a really great piece on crypto credit markets, and how lending is becoming more important to the crypto financial services ecosystem. And I think this probably ties into a little bit of what you were hinting at in terms of pre-funding at exchanges and how the settlement cycle is just very different. Do you want to just kind of talk about, I guess, maybe what made you want to write an article focused completely on crypto credit markets? And we'll link to the article in the show notes. You should definitely check it out if you haven't read it already. But what was happening in the market, or what things did you see in terms of the developing market structure that made you think you needed to pin a really well thought out piece on that subject specifically?
Yeah, so kind of two things. So one is just the investments that we've made and working with the trading side of Jump over the years, and seeing the market structure and the reasons that interest rates are what they are, and how capital intensive the market is, and just all of these things that you see from a trading perspective, which I had seen over the years, and having a pretty deep understanding of all of that. And then coupled with, frankly, the success of BlockFi and the high interest rates that are available in the crypto markets, and people reaching out to me every day and saying like, oh my God, like I can earn 8.6% on my dollars with BlockFi. Like, one, is this real? I'm like, yes, it's real. Like, give your money to BlockFi. It's a good idea. And then two, like, people's next question is like, okay, like how does this work? Like, why does this exist? Why are crypto companies able to pay these so much higher interest rates? So the piece that I wrote was really just kind of me getting that all on paper to describe like, this is why this exists, and here are the underlying factors on why these high interest rates are available in crypto, and why I think that companies that are building in crypto, specifically crypto credit financial institutions like BlockFi, I think are primed to be the next kind of global iconic financial institutions built on crypto rails, because it is essentially just a better way to build a financial institution, in my view, especially a global financial institution, and what the future holds. So those were the questions that I was looking to, answer, because those are the questions that I'm asked on a regular basis.
So let's unpack some of that a little bit, because I think the question that you brought up is probably the most common question we get at BlockFi as well, around how is it possible that you're offering folks 8.6% interest, or these high interest rates that for someone who's seeing crypto credit markets for the first time just seem too good to be true. But why does that exist in the market?
Yes, so there are a few reasons why that exists. So first, starting with, they exist, kind of the real basic reason is that you can pay 8.6% interest to depositors because there are borrowers that are willing to pay more than that. And why are borrowers willing to pay more than that? Largely, those borrowers are traders, and they are willing to pay that because they can earn substantially more than that through their trading activities. And those trading activities a lot of those are fairly straightforward trades that offer high rates of return. Things like the basis trade, buying spot, selling futures. JP Morgan recently put out a report about this, about just how profitable that trade is right now, the basis trade, which is relatively straightforward. There are things like cross-exchange arbitrage, buying on one exchange and selling on another exchange. That opportunity has come down, but there still is that opportunity there sometimes. And then there are these other unique trades that come up, like the grayscale trade. Buying GBDC at NAV and then selling at a premium was a very profitable trade for a long time. That's gone away now as the GBDC has gone to a discount. I think actually offers a much more enticing ARB now, is that you can buy at a discount and then you're probably going to be able to redeem or sell at NAV when Grayscale gets converted to an ETF. So there are these various trades that you can do that are quite profitable. And then you've combined these trading opportunities with the fact that the market is intensely capital inefficient. And specifically that, as I mentioned, you need to pre-fund at every exchange. Traders need to pre-fund. So the key difference of, if you look at how the traditional markets work and how the crypto markets work from a funding perspective, if you're trading in the equity markets, you're a large trading firm, you're trading in the equity markets, and you want the ability to buy or sell $1 million on one of any 10 exchanges, you'll give $1 million to your prime broker. You're actually going to give less to that because they're going to give you leverage. But let's just say you give $1 million to your prime broker, and then you can instantly buy or sell $1 million on any one of these 10 exchanges. In the crypto world, if you want the ability to buy or sell $1 million instantly on any one of 10 exchanges, you need to pre-fund $1 million of crypto and $1 million of cash on each of those 10 exchanges. So you have $20 million outlaid to have the same buying power as it took $1 million in the traditional markets.
And there's probably some leverage multiple in the traditional markets example, where if you want to trade the million, you're only putting up $500,000 or even 100,000, depending on your prime broker relationships.
Right. So maybe you're actually putting up $250K for that $1 million of buying power. So on one side, traditional markets, you're putting up $250K. In the crypto markets, you're putting up 20 million. It takes 80 times more capital to have the same buying power in the crypto markets. So that creates just this huge capital need for trading firms, that they need to borrow the capital. And that is what creates this huge opportunity for depositors, lenders to earn significant rates of return, because there's so much capital that is needed by these trading firms. And then there's other borrowers that are also interested. It's not just purely trading, but I'd say that trading is the most obvious and the largest source of capital need that's creating this opportunity.
You also touched on stablecoins a bit in the article, and I know that's a theme that y'all are very interested in, and I think bullish on within Jump Capital. What are some of your views on stablecoins? I saw this morning, I think we're up over 70 billion now in terms of the total stablecoin market cap. So it's growing incredibly quickly. What do you think is driving that? And what types of things do you think we'll see, evolve in that market, or kind of what are y'all watching in terms of the development of that stablecoin market?
Yeah, we think stablecoins will be the biggest story in crypto over the next 5 years. I think that is the area that not enough people are paying attention to. Some people are. You certainly are. Matt and Nick at Castle Island are. There's a handful of folks that are really paying attention to this, but it is going to have a huge impact on the world. And really, there is massive demand for dollars outside the U.S. And before now, it was very difficult for many to hold dollars. Like you could not, anyone in the world just could not get a U.S. bank account. Now with stablecoins, anyone in the world can get a crypto wallet. And that means anyone in the world can hold and spend US dollars. And this is truly just revolutionary. I think it's going to put pressure on currencies, a lot of weaker currencies, and companies that don't have, good central banks and governments, that people don't trust those currencies. We're certainly seeing that in some places already. And I think that is going to really be the big story as we see, dollarization, crypto dollarization in a lot of countries, and increasing use of, crypto dollars for a whole lot of use cases. It's interesting. I was working with a company recently that they were setting up a new international entity. And it's, okay, we got the international entity set up. Now we need to get a bank account. That bank account is going to take several weeks to set up, but they've already set up a crypto account. So I say, but so you can already send dollars, you can send and receive dollars, they just need to be USDC. Yeah. So it almost like your traditional bank account almost becomes a little bit less necessary. So that's what I think is we're going to see on the stablecoin space. It's one of the things that I think is great about BlockFi and others in the space, is that you're enabling, borrowing and lending of dollars to, folks that typically, traditionally didn't have access to that. And that is a whole new market. I'd be interested to see kind of what you're seeing from international demand for stablecoins.
I mean, look, we're incredibly bullish on it, and there are some interesting data points if you look at BlockFi's client base and their usage of stablecoins. So our client base today is about 65% US, 35% rest of world, and the clients from outside the US on average are more likely to have a bigger allocation towards stablecoins, and they're more likely to be an account that only has stablecoins in it. So that's a minority of accounts at BlockFi. Most accounts at BlockFi have crypto and maybe some stablecoins, but there's this segment of accounts which is growing quickly, but it's maybe less than 5% of the overall accounts that only hold stablecoins. And those accounts are much more likely to be an account for a non-US person or business than a US account. So I think that just this concept of a more global financial market that retail has access to, powered by stablecoins, is huge. I mean, we in the US take for granted being able to access debt and credit. It's just how our economy works. And so whether it's credit cards or mortgages or personal loans or business loans, I mean, there's in general very, very high credit availability here. And part of that is because of our capital markets system. Part of it is because of our legal system, but also a big part of it is the fact that we have the dollar, which is a relatively stable currency, and because of that stability, lenders are willing to lend. It's a lot harder to lend when you're talking about a base currency that inflates at somewhere between 10 and 40% a year. What interest rate do you have to charge? How long term of a loan are you willing to make when there's so much uncertainty in terms of the price for the base currency that you're lending? And so giving the developing and emerging markets in the world access to borrow dollars, I think is really exciting. And then giving the developed markets of the world, and I'm not thinking just the US, but 8.6 is a really exciting interest rate to someone in the US. It's even more exciting to someone in Japan or parts of Western Europe. And so just kind of like connecting these two very different worlds in a single market, I think is compelling in the same way that sharing information more globally with the internet is compelling. And it's kind of a second derivative of crypto market implications that I think doesn't get as much attention because it's not necessarily as sexy as 10xing your money because you bought Bitcoin or something else. And it's certainly not as volatile. You're talking about lending traditional currencies at single digit or maybe high single digit interest rates. Like, yes, it's great, but it's not kind of as inherently exciting as the volatility that you see in just general crypto asset prices. But it's growing incredibly quickly, and I think it will have a fundamentally positive impact on global society by making these things more accessible to more people.
Yeah, I think it is just as exciting as coins that are going up 100x, because the crypto credit market, it makes the world incredibly flat. If you think of like how capital moves around the world right now, from a depositor, let's say in the US to a borrower, in Asia, like that can happen, but that is going through layers of banks and correspondent banks and intermediaries to do that, and it's very inefficient. In crypto, it can go from anyone in the world can borrow or lend using BlockFi, and that just seamlessly can go to anybody else in the world. And that is the, I think, beautiful thing about crypto, is that it makes it very flat. It strips out intermediaries. It makes it much more efficient for capital to move across the world. And I think it's just a better rail to build a financial institution on.
Yep, couldn't agree more. So there's crypto credit, stable coins. The other big thing that I wanted to pick your brain on is just institutional adoption. And so I'd be curious, what thoughts you can share in terms of trends y'all are seeing, either as a market participant in crypto and maybe some of the counterparties that you might work with, or as an investor into the crypto ecosystem, and what types of trends you're seeing in terms of the enablement of further institutional adoption of the asset class.
So it's coming. It's definitely coming, and that's something that we thought years ago it might be coming, and it turns out they had the committee meetings to decide it was coming, but then the market didn't stay elevated long enough for it to really come in 2018. Now it's happened. Like, they've made the decisions. The large financial institutions have all made the decisions that they're coming in here in a big way. The more nimble institutions, hedge funds, especially global macro hedge funds, you've seen them come in hard. The Paul Tudor Joneses of the world, Bridgewater, has now said that they are, active in the market, but not doing it in size yet, which I think makes it clear to me that they will be at some point. So the hedge funds, they are in for sure. The large, banks and financial institutions, insurance companies, even, you're starting to see a lot of movement there. I think everyone is either in this space or they've had the committee meetings to decide that they will be coming in, and it's just a matter of time, before they're in, before they're trading. These things take time. For a large, bank to come in, they need to figure out how they're going to do custody and do trading and have other counterparties in. And these things they take time, but the decision's been made for most of them that they're coming in. I think that there's, central banks, that this is not, don't know this for sure, but I think central banks have probably made this decision as well, that some of them are buying Bitcoin. I would be surprised if they're not. So I think it's happening, but we're still on the early phases of it actually coming to fruition. So for people I talk to people and they worry oh, I wish I wasn't so late to the crypto party. you're not late. Like we are still very, very, very early.
Do you think that this capital efficiency challenge that exists in the marketplace that enables high yields to be paid to depositors, do you think that will persist through this next wave of institutional adoption, or do you think that we're right around the corner from having traditional prime brokers doing things for crypto market participants like what they do in traditional asset classes?
I think we're still a ways off. At the beginning of the year, I predicted that we'd see at least one major kind of bulge bracket bank doing real prime brokerage for crypto this year. I might have been a little bit early on that, just based on the
less confident after the first quarter.
Based on the first quarter, I think that they're coming, but it's just going to take some time. I also think that we're going to see kind of two things happen over the coming years. Is that one, banks, financial institutions, they're going to come into this space. Some of these capital inefficiencies are going to get solved, and the trading market's going to get more efficient. At the same time, this market is going to grow exponentially. So you're going to see kind of more capital efficiency for the space growing exponentially. So like, what does that mean for the crypto credit market? I think net it grows a lot over the coming years, just because the market is going to grow so much, and that's more than going to offset any increases in capital efficiency that we see.
Yep, makes total sense, and I tend to agree with your updated view on the timeline for banks having like something like a prime brokerage offering that's competitive with folks who are working on doing that in crypto. One of the other things that's on the list that they have to figure out, which is going to be really hard, at least for US banks, is just the regulatory capital treatment of Bitcoin if you're actually lending against it, which is very different than for example, just facilitating a trade. And so it'll be interesting to see. They're definitely closer than they were a year ago, but my sense is that they're not imminently close quite yet.
Yeah, it's difficult from a custody perspective, from connecting to venues, from all of these things that you need to do. It'll take a while, and they'll go down the path. Like they'll start by offering regulated products like they do now. Like they'll offer like the Galaxy Fund or things like that, or the BlockFi Trust product, and then they'll kind of move to the next step of holding coins, and then maybe trading coins, and then providing some leverage. But it takes a long time to go down that path. And then even at the end of the day, you made an interesting point that even when they get there, they might be at a structural disadvantage because of capital requirements to crypto native companies. That crypto native companies may end up having the upper hand just because of the regulatory structure that they're under.
Yeah, it's going to be really interesting to see how it plays out. So I've got one last question for you, Peter. It's actually a two-part question. Personally, when you're investing in crypto, are there any portfolio allocation kind of breakdowns that you're willing to share with us in terms of how you invest personally in the space and what assets you own? And then do you have a Bitcoin price prediction, let's say for this year, that you'd be willing to share with the audience?
So I'll start with that one. I'm not going to make a new Bitcoin price prediction because in November of last year, my 2021 prediction was that it would get to 50,000, and it crushed that prediction in like a month. So I'm not going to make another prediction. Personal crypto portfolio, we are doing a lot of interesting things at Jump Capital from an investment perspective. Me personally, I don't do anything that interesting. I hold a lot of Bitcoin, and I dabble in things like Ethereum and Solana and Luna that I think are interesting, promising projects. But most of our activity is focused on what we can do through Jump Capital, and there's where we really get behind the interesting projects.
Awesome. Well, it was so great having you on. Do you want to leave us with a Twitter handle plug or any areas that folks can follow you or get in touch that you want to mention?
Yeah, so jumpcap.com is Jump Capital's website. And me personally, I'm at the Chicago VC on Twitter.
Awesome. Really enjoyed it, Peter. Thanks for coming on, and we'll be in touch.
Thanks, Zach.
See ya.